update on the long trade idea for VRA. Yes, we're moving higher. We broke the start of wave E and we're off to the races. So at this point in time, I can say, yes, we have a measured move up 400% incoming, and I got you in right on time, support level established, and this move is moving higher. It's pretty obvious, right? When things start to get sharp, we know, right? Except you have to understand, it's not going to the fucking moon. These moves are limited, right? Well, that's because we have an objective here. The objective is to move to the target of the last high. Why is that? Right? And I keep trying to explain this to people, and I'm going to keep explaining it, right? Because I want to teach you how AriasWave works. It's not Elliott Wave. So within each move, you get something called a correction after a while, right? So you have a 5-wave move, and by the way, whenever I draw these lines, yes, you can imagine 5 waves in there. Okay, I don't have to draw the whole 5 waves each time, but you know what? For the purpose of this, let's do it. So you get 5 waves up. The end of the move, you get a correction. Correction goes like this, right? And I'm gonna just do it a little bit in more detail this time, and it's gonna get more crazier as we move along with the detail, right? So you get an A, right? You get a B, right? So it takes time to do it this way, but it's the same thing, the same principle, right? You get a D. I could have gone into more detail with the 2 and the 4 on the previous move, but we just keep it simple here, right? And then you get your 5 waves up. Okay, that's a complete zigzag, right? Now, in these moves, in the 2 and the 4s of the 5-wave moves, yes, you get the same pattern again. But trying to keep it simple here, you got to learn to crawl before you walk. So I suppose what I'm trying to say here is this pattern here is what we're seeing here. Okay? It's limited. Why is it limited? Because we have the A wave to measure against. Right? The A wave is this length. Right? So we put it here down the bottom here. It's like, oh, well, it's not long enough. Well, the rule is that it has to make a new high above not only the first A, but any previous corrective waves. Right? So that includes that B wave. So the B wave, the last high of the correction within this zigzag, has to be surpassed. Therefore, we're going to hit that target. So at a minimum, we're going to hit that target. That's as simple as that, right? Is this going to go to the moon? No, it's not going to do that in this particular run. Why? Because like I told you, it's a measured move for D wave. After that, we're going to get a pullback, wave E, right? Some patterns form in this particular way where you get a C wave, a D wave, and an E wave. And this is why Elliott Wave tends to think, and by the way, let remind you once again, this is not fucking Elliott Wave. Get that shit out of your fucking head. Elliott Wave seems to think that a complete correction is, right, a 5-wave move followed by a zigzag, and this is what their zigzags look like, followed by a 5-wave move, right? And that comes after the initial 5-wave move, right? But the problem is here that we're using Bitcoin as a guide, and this is not just any 5-wave move that happened at the beginning, right? This is part of a larger pattern, which is the end of a wave B, right? Because price action tends to follow Bitcoin. Okay, so if we're extrapolating Bitcoin pricing to this chart, to me, the only way that you can make sense of this is if you look at it this way. Can't see the rest of the pattern because it never existed before this time. Had the 5-wave move 2021, 2020, 2021, right? And then you have another 5-wave move down. C. It's a C wave, right? And then what's up to C? You learn your A, B, C in school. I'm sure you did. Well, it's D. And D wave is always a zigzag. Come back to my little example here. A, B, C, D. So we're here now about to produce the C wave in brackets, right? In brackets of the D wave, right? And that's what we're trading. So that's why it's beautiful when down the bottom here, right? So, okay, let me clean this chart up a little bit so I can explain something that's very important when it comes to trading using AriasWave, right? Now, you had your A, you had your B, you had your C, and you had a small D and E. Can you see that down there? Do you want me to zoom in? Yes, zoom in, right? It's not fucking rocket science. There's a D wave there, no new low, new high. It's a fucking D and E pattern. Beautiful, because it's tiny, it's small, it's nice. Why is it nice? Because it's a small stop. It's a small stop, right? Can you see how price never went below the end of wave E? After it moved up again, it's called support. This is why people always say, look left, look left. Did we break down below that? No, it's support. It's because it has to. It's a rule. If we didn't have these rules in trading, we would be fucked. We wouldn't be able to do anything like we do. I wouldn't be able to make these ideas, and it'd be a complete shit show from the beginning. It'd be like chaos with no end, and you can't make sense of chaos. But this is not chaos. This is just a pattern, fractal pattern. So therefore, okay, great. 1, A, B, C, D, E. Put out an idea around here because I see an E. Bang, boom, bam. Up, 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 up. Beautiful, right? That's great, right? You can hate me for not expecting XLM to go to the fucking moon. That's fine. I don't fucking care, right? But I'm still making money, right? And there's a difference between short-term trades and long-term investment, by the way. In case you've got that all twisted in your mind, you need to discern between long-term investment, short-term trades, right? XLM, E-Wave, I can't pinpoint where that's going to end. Why would I trade it? This, being a zigzag, it falls within the framework of an acceptable short-term trade. Because why? Because it has a target. There's a target, right? When it comes to E-waves within a zigzag, I don't trade corrections. I'm sorry, right? This is the thing. Let's go back to the example. Let me show you what I'm talking about here. Once I fix up this messy chop. 1 second. Here we go. Right. So going back to my example on the waves, right? Okay. So let's just say I'm in a zigzag. So the A, the B, the C, the D, and the E, right? The E wave is going down, 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 down. It can go down all the way, almost 100%, as long as it doesn't go below the start of the first wave, right? Okay, fine. You got to wait for that to end before you can trade it up. Now, when it gets down to this level, that's fine. But let's just say that you wanted to trade that E wave down. Well, you're taking a risk because the C wave here could have extended higher or whatever bullshit, right? I don't trade corrective patterns. I don't trade corrective patterns. I trade in a zigzag. I will trade the A in brackets and the C in brackets. But within a correction, I don't give a shit if it's long-term correction, right? I won't trade the corrective waves. Like, especially not a 5-wave move, right? Now, within a zigzag, you can trade like the C wave, right? Because you had the initial move, you had the correction, you got a measured move, same length as wave A in brackets, right? But when it comes to a 5-wave move, do you know when it begins? Do you know when it ends? It's corrective, it's choppy, it's shit. Sometimes it's really shit to begin with, right? An example of that is this type of shit, right? This here, look at that shit. Look, and it's even worse on other charts, right? It's even worse on like Ethereum and just any other chart. You look at the top, it's a choppy mess. You don't want to be trading the first move, right? Or the beginning of a 5-wave correction. Unless you see the first 5 waves and you know what the fuck you're trading. First 5 waves, then you look for a correction, trade the wave 3, right? Anyway, the point here is that I don't trade corrective patterns a lot. I like to trade the big meat of the moves, not the fucking vegetables and the potatoes. I like the meat of the move, right? So in VRA, we're trading the meat of the move. It's easy to gauge. There's no fucking around, right? If you try to trade an E wave, you're going to get burned, right? Because that E wave could end before you know it, or it could continue lower, and you just fucking, you're like, yeah, you can do it. Absolutely you can. You fucking can. I'm not saying you can't. I'm just saying I don't do that, and I'm not going to post videos here asking you to trade a fucking E-wave, right? Because those E-waves, if you don't know, they can turn into some funky ass moves, and they're not always nice and sharp and straight, right? Sometimes they chop out like a son of a bitch. So from experience, I've learned don't trade E-waves. Trade the impulsive motive 5-wave move portion. And just a reminder, this is not Elliott Wave. Elliott Wave is shit, right? It was created in the early 1900s by some dude without a computer using printed charts and fucked up knowledge, right? And I think the guy was sick too, Ralph Nelson Elliott. Anyway, these dudes rediscovered it in the 80s and they didn't do shit to it. They just said, oh, we can't change this. It's fucking gospel. It's like the fucking Bible. We're just going to reprint this Bible. Yeah, you see, that shit doesn't work. So that's why, using the latest fucking technology, I decided to do my own research. 8 years later, boom, this is the type of shit you're looking at, right? So I don't mean to sound crass, but it's the truth, right? It's the truth. So my ideas will be purely based on this moving forward. As you know, that's what I do. So don't try to bring that Elliott Wave crap, even though a lot of people are not going to watch this video and they're still going to say, get an Elliott Wave book, learn the waves, blah, blah, blah. It's like, no, bro. You learn the fucking waves. And you know what? You spent fucking 8 years trying to learn the waves and you come back and tell me that you don't know how to fucking read the waves. Get the fuck out of here. Right? Okay, cool. So that's the deal, right? This shit's going to move higher. Amazing, right? It's moving higher during this fucking video, 27%. Amazing, right? It's going to keep moving higher and higher and higher and higher. Let's just pushing higher now. Look, let's just keep pushing, right? This shit is rock and rolling. But it's not to say that I can't predict the waves. It's just basically just saying that I would like it if I know where the wave is going, so I can make some money, so I could put a take profit target, set it and fucking forget it, go to sleep, good night, right? Because this shit ain't going to happen whilst you're awake, right? It's going to take a few hours, right? It's going to take 400% move, right? It's going to take, like 300% move from where we are, roughly. Yeah, it's probably going to take a day or 2 or 3 or 4, whatever, but I'm not going to be glued to my screen day trading that shit, right? It's a swing trade. It's a swing trade. So if you have a take profit target, you set it and you forget it. You move on, done. That's enough from me. Too much rant. If you like it, leave a comment, especially if you want to learn more. Ask the questions to help you learn, right? because the questions you ask will be what I'll put in the next video, so you actually can learn something rather than just leaving some bullshit comment that doesn't mean shit to anybody. You feel amazing to yourself for 1 minute and then nobody cares, right? If you want to actually learn how the shit works and you need to ask a question because you missed something, ask the question. I'll put it in my next video. Thanks for watching.